The great fiat experiment, money printers have run wild, but for how long? The world has embarked on a reckless experiment replacing sound money with fiat currency. For decades, central banks have flooded the system with paper money. This has created the illusion of prosperity. But at what cost? The value of our savings is being eroded. Like a snowball rolling downhill, the consequences of this monetary avalanche are gaining momentum. History teaches us that empires built on debt and inflation are destined to crumble. We are witnessing the early stages of this collapse. The purchasing power of the dollar, euro, yen, all fiat currencies are in a race to the bottom. The inevitable consequence of this global monetary debasement is rising prices across the board. The warning signs are flashing red. Inflation is stubbornly high. Interest rates are rising. The stock market, fueled by cheap money, is teetering on the edge. Investors are searching for safe havens from the coming storm. This is where commodities, particularly silver, enter the picture. A world on edge. Scarcity and uncertainty fuel the commodity boom. Geopolitical tensions are escalating, disrupting supply chains and fueling uncertainty. The world is waking up to the risks of globalization. From energy to agriculture, we rely on a complex web of interconnected systems. Disruptions in one area can quickly cascade, creating shortages and price spikes. We've seen this play out in real time. The conflict in Eastern Europe sent shockwaves through global energy markets. Prices for oil, natural gas, and wheat soared to multi-year highs. This is just a taste of what's to come as the world becomes more fragmented and unpredictable. Against this backdrop, investors are flocking to hard assets. Gold, the ultimate safe haven, recently broke above its all-time high. Other commodities, from coffee to copper, are experiencing similar surges. This is not a coincidence. Investors are seeking protection from inflation and geopolitical uncertainty. Silver, the forgotten precious metal, awakens. Silver, often overshadowed by its more expensive cousin gold, is poised for a significant move of its own. It shares many of the same attributes as gold. It's a tangible asset with a limited supply. But silver has one crucial difference. It's not just a monetary metal, it's an industrial metal. Silver is used in everything from solar panels to electric vehicles to medical devices. Demand from these sectors is only going to increase as the world transitions to a more technology-driven future. Yet silver production is struggling to keep pace. New discoveries are rare and existing mines are becoming depleted. This supply-demand imbalance is a recipe for higher prices. Let's examine the gold-silver ratio. This ratio tells us how many ounces of silver it takes to buy 1 ounce of gold. Historically, this ratio has averaged around 15 to 1. Today, it stands at over 70 to 1. This means that silver is significantly undervalued relative to gold. A golden opportunity, positioning for profit in the silver surge. While the price of silver has risen in recent months, it remains far below its historical highs. In 1980, silver reached nearly $50 an ounce. Adjusted for inflation, that's over $150 in today's dollars. This suggests that silver has significant upside potential. The stage is set for a silver surge. The confluence of factors discussed, reckless money printing, geopolitical uncertainty, and strong industrial demand, create a perfect storm for higher silver prices. Investors who ignore silver do so at their own peril. Now is the time to consider adding this essential precious metal to your portfolio. Remember, fortunes are made in times of crisis. The silver surge is an opportunity to not only preserve your wealth, but to grow it substantially.